So now let's look at the PowerTrend option trading, and we want to purchase call options on stocks that are on a PowerTrend buy signal, and we want to purchase put options on stocks that are on a PowerTrend sell signal. So right now, most stocks and ETFs are on a buy signal, so we'll just focus on buy signals today. But in the past, during bear markets, we did profit using PowerTrend by taking short positions based on the PowerTrend signals, and we profited during very severe bear markets with short positions. So again, the PowerTrend buy signal occurs if the 1-month price is above the 10-month SMA on the last trading day of the month, and a PowerTrend sell signal occurs when the 1-month price is below the 10-month SMA on the last trading day of the month. So purchasing calls, of course, is a bullish strategy. Value of a call option increases as the underlying stock or ETF increases in price. With call option purchases, your risk is limited to the cost of the call, and a margin account is normally not required for option purchases. We normally initiate call option purchases with 1 to 3 months until option expiration if we're purchasing that option after a PowerTrend buy signal has already occurred. So if the buy signal has already occurred and we're purchasing a call option, we'll normally go out 1 to 3 months until expiration. And if we're purchasing a call option on the day of a PowerTrend buy signal, we normally will purchase calls with 3 to 6 months until expiration, and then those options can be rolled over if the underlying stock is still on a PowerTrend buy signal. So we look for longer term options on the day of a buy signal because we know the average buy signal will last 6 months or longer. So we like to go longer out on the day of a buy signal. If we purchase after a buy signal, then we normally look to trade 1 to 3 months out. Now, most call options cost between $500 and $1,500, and you can trade a portfolio of call options in a $5,000 trading account. So let's look at the stock selection we use for bullish option trades. And again, we purchase options on stocks that are on a PowerTrend buy signal for call option purchases. If we can identify a stock in a price uptrend using the 10-month simple moving average, we can profit by purchasing call options, which allow us to harness the leverage that options provide. So there's 2 steps in PowerTrend option trading. The first step, of course, is we determine the price trend of a stock using the 10-month simple moving average. And then the second step is we use the 1% rule to select a call option strike price for a higher percentage of winning trades. And we'll show you how we use that 1% rule here in a minute. Okay, step 1, determine the price trend using the 10-month simple moving average. And let's look at some current trade examples to demonstrate this. This is a monthly price chart and 10-month simple moving average for the utilities spider, symbol XLU, and we can see last June the XLU went on a buy signal as the 1-month price right here crossed above the 10-month simple moving average in the last trading day of June. So at that point, XLU was on a buy signal. So more recently, we purchased XLU call options. We bought to open the XLU June 21st, 2019, 40 strike calls at 1480. So that was right in here. This is on January 31st. So you can see the buy signal was back here in June. So we're purchasing after the buy signal, and we bought the June 40 strike calls at 1480 on January 31st. So this is an example of purchasing a call option after the 10-month SMA buy signal. So we are utilizing our money management principle of exiting losing trades before they develop into large losses with this XLU trade that we currently have. Here's another example. This is for the cloud computing ETF, symbol SKYY. We can see right in here, the last trading day in January, the 1-month price crossed above 10-month SMA. So Sky was back on a buy signal on that last trading day of January. And our brokerage confirmation shows that on January 31st, we bought the Sky July 40.72 call strike at 1333. So SKYY had a distribution which changed the strike prices. Normally you see strike prices in even dollar amounts, 40, 41, 42. But after the distribution, this turned out to be the 40.72 strike call, and we purchased that at 1333. So this call was purchased on the day that SKYY changed from a sell signal to a buy signal on January 31st. So this is an example of purchasing on the day the buy signal occurs. And we currently have a 37.8% return on the Sky call option, and over the same period, the ETF had a 7.9% return. So this just demonstrates the leverage that options provide. So the option is outperforming the ETF 4.7 to 1. So this shows that we have leverage with this option trade, and it has a higher gain over the same period as the SKYY ETF.